And joining us for further analysis on what's playing itself out on that market scene is Vega Capital's Louis Storm. Louis, good afternoon to you. Thank you so much for chatting to us.
Hello, thanks for having me on the show.
All right, Louis, I think one thing that does stand out for me today is the rand. That seems to have fallen quite a bit over the last few days. Help us understand exactly what transpired here, or what is happening with our currency. Is it a matter of dollar strength, or is there also some rand weakness in there?
No, it's very much just rand weakness. The GDP print was very disappointing yesterday. However, this is probably expected. Load shedding is putting a lot of pressure on the margins of businesses, as well as we're seeing massive delays at our ports. So Transnet is creating a huge headache as well. So we urgently need to address the structural barriers to grow, to start growing our country again, and to start growing the economy. Actually, what the USD is actually weakening as well. So it really wasn't a case of USD strength. It's mostly a case of rand weakening.
Also, keen to get your thoughts on what we're seeing with our resources counters. Now, it's been a very volatile year for resources, as we've seen, Louis. But today seems to be more of a decent day. We have quite a few miners in the top 10 of the top 100, implats and amplats, which are normally in the red, Sibanye as well. I'm wondering if we know what is driving this upbeat sentiment towards our miners.
Well, it's basically, you've seen US yields dropping as well. The job report that the print that came out yesterday actually showed that jobs were slowing, which you'd probably take as a negative for the global economy. But this is seen as a positive because this allows the Fed to actually start cutting interest rates. And this is what they wanted. They wanted jobs to start decreasing, so that inflation to start decreasing, and this will actually give a boost, or most analysts would think this would give a boost to the economy in 2024, which obviously would help commodity prices. So it's very much, it's nothing that's set in stone. It's just more a hope, more of a fact.
I'd like us to stay in the US and just looking at those bond yields. It also has been a very interesting year, actually, for US bonds, Louis. Let's just reflect on what we are seeing happening right now, especially on the back of this jobs data.
So we are seeing that most economies are slowing, inflation slowing, and then wage growth is also decreasing. So that's basically what everyone wanted to see, or the Fed wanted to see. So this means that interest rates would probably go down next year, and most analysts are talking around 100 basis points worth of cuts next year. So this is obviously a great investment case for US bonds. So this will obviously decrease yield because you can lock in a much higher yield now than you would probably get in a year's time. So yes, that's obviously why bonds are currently outperforming and might outperform other asset classes for the next couple of months.
And I know it hasn't been a very strong year for financial markets around the world. Maybe if you strip out what we're seeing with the Magnificent Seven in the United States, it really hasn't been a great market, even equities. But what we are hearing are odd conversations about IPOs. And I'm just wondering to get your thoughts there. Maybe first of all, starting with Process and them listing of PayU. Of course, market conditions aren't necessarily all that we're looking at here. The fundamentals of the business also matter. Keen to get your thoughts on what they're deciding here.
So the Process are trading at a massive discount to the net asset value, and they have been trading at a discount for some time now. So they've been looking at ways to decrease that discount. So one way is obviously to list some of their unlisted businesses. And PayU has been an incredible business, growing at a good rate. So this would definitely, I think, unlock some of the value and help decrease that discount to NAV.
And of course, then yesterday we would have heard of Transaction Capital also making mention of a listing for We Buy Cars. Let's talk about that business because, of course, This is a business that has caught some good crowding here in South Africa, but we are seeing consumers still cash-strapped. I'm wondering if the fundamentals of We Buy Cars, Louis, are strong enough for a listing at present.
I think it's just still the SA taxi business. There's a lot of negativity around the business, and this will influence We Buy Cars, listed or not listed. I think this will still play a massive role. The SA taxi business model obviously works great in a thriving economy with lower interest rates, but they've had a tough time of late. But it still remains to be seen how much was actually loaned to SA taxi from We Buy Cars. We Buy Cars obviously still still profitable and a great business. But as you mentioned just now, we've got cash-strapped citizens, and I think there will be some volatility in their revenue. So definitely, I think they might add value by listing it on their own, listing the business separately. But I wouldn't think they're out of the woods yet.
We'll be watching that one very closely. I'm also keen just to glance over to China. We've seen Moody's come out to downgrade their outlook on China's government credit ratings to negative from stable. What are your thoughts here? It has been a difficult one, but what we do know from the Chinese economy, and maybe it's more sentiment than data at this point, is that they will sort it out, Louis, won't they?
That's what we were hoping for quite a while now. But I think that was very much expected. Debt levels in China is rising while GDP growth rate continues to disappoint. And also China was forced to increase fiscal stimulus to support local governments and contain the spiraling debt crisis among the country's property developers. That obviously placed massive amounts of stress on the country. So yeah, I wouldn't say we're still not overly positive on the Chinese narrative. So we'll see how that pans out.
We do know that, of course, we're wrapping up this year, and I'm very keen to get, just staying with China a little bit, your thoughts even on the changing of the economy. Many have said that it's moving away from an investment-driven economy to a consumption-based economy. Is that sustainable for a country like China?
I think China is probably a few years away from changing the economy, and definitely a few years away from getting the sort of growth that they were used to a few years back. There's a lot of issues that need to be sorted out, specifically debt issues that will be, could cause a bit of a crisis for them. So at the moment, to be honest, it's very volatile in China. I'm not sure. I don't think anyone's quite sure exactly what will happen, and that's why we kind of expected some downgrades to their debt.
Well, Louis, I'm keen to get your stock pick in a bit, but first I'd like us to reflect on counters that have found favour with your industry peers. Let's take a look.
DataTech, I think a couple of months ago they announced a very clean set of results, nice return to growth. They fixed their LATAM business, and they're trading at a big discount to other ICT sort of related businesses globally, their peers. So I think there's decent upside in there. And obviously management own a big stake in the company, so there's this good incentive for them to do the right things. So I think DataTech is a nice pick for the next year or so.
DataTech, just fundamentally growing earnings consistently at 15%, sitting on a 15p, so you get what you pay for. But price momentum still going up. They've just broken to a new high. That trend looks intact, and hopefully we can see, just technically another 15 to 20% increase in that price in the short to medium term.
It's Alphabet again. Look, they delayed the Gemini list, launch from this month till next month. So it's a bit of a disappointing bit of news. But looking at what we expect to come out of the company over the next little while, I think there's still a huge amount of potential in Alphabet. They've come up with some really interesting things with the DeepMind unit recently, and I do think that it does appear that they are trying to catch up with some of the Microsoft's advances in their sector. And I'm really positive about Gemini, which does launch next month, even though it's a month late.
All right, are you keen to get your thoughts on some of those counters? We have DataTech, Advatech, as well as Alphabet.
So the Alphabet is one of our picks as well. Can give you some more insights on that. Obviously, in 2024, we do feel the economy will slow. However, the interest rates will also come down, which is a massive positive for the valuation of those tech companies, because most of the returns are forecasted far into the future. So just a boost from a valuation point of view would provide some decent upside for Alphabet. That's not even taking into account the incredible business that it is and the huge revenue stream forecasted for the next 10 years. So that's definitely one of our picks as well. The other two companies, it's not currently on our buy list.
I must also ask you then about your own counter this week. We can't call it a stock pick because you have gone for US Treasury bonds. I think you made the case for them a little bit earlier, Louis, but let's just touch on why this is where you're leaning towards right now.
Well, I think this is kind of our base case scenario, if it plays out, it's kind of an ideal scenario for bonds. If in a scenario where inflation is falling, economic growth is cooling, as well as interest rates that's forecast to decrease significantly, we can't see our bond yield can stay at these levels. So I think definitely where in the past bond yields weren't very attractive at yields of 1% or 0.5%, the US Treasury bonds actually is looking very attractive at 4.2 or 4.5% yield. So that is my, we don't call it a stock pick, but investment pick for the day.
Well, Louis, always a pleasure speaking to you. Thank you so much for your time this afternoon. That was Louis Storm from Vega Capital.